So I want to share with you guys today one of my I don't want to call it a secret. It's not a secret, but it's a tip that I wish I was introduced to when I first got started. And it's really just the principle of slowing things down. Also, let me know down in the comment section if you prefer this angle versus the other one that I used to use. So let's go ahead and jump right into my screen just so you guys can see exactly what it is that I'm looking at. On TQQQ, I walked away with $5,032, and on SQQQ, a little bit over $4,100 on the day. Let's start off with TQQ. For those that are unaware, NASDAQ QQQ is a NASDAQ ETF, meaning that it goes up when the NASDAQ market goes up. QQQ is a 1-for-1, meaning that when the NASDAQ market moves 1%, so does QQQ. When the NASDAQ market is down 1%, so is QQQ. So it's a 1-for-1. TQQQ and SQQQ are triple leverage. TQQQ is the bullish one. So when NASDAQ or when QQQ is up 1%, TQQQ is up 3%. Makes sense? SQQQ is the inverse of that, meaning that when NASDAQ is down, like today it was 0.76%, then SQQQ is up, as you can see, up 2.39%. Very simple, right? One goes up with the NASDAQ market, one does the opposite of the NASDAQ market, being the inverse of it. One of my favorite patterns to trade are reversals. I'm not encouraging it for you. I'm just telling you that's what I personally like to trade. One of the concepts that I talk about in my lesson library with the LPP team are the 3 stages of a reversal. And by slowing down, right? So when looking at the 1 minute, at least to me, this looks like it's all over the place, right? I have found myself over trading when I'm on the 1 minute time frame. And let me know in the comment section if you agree. So when being on the 1 minute time frame, it's just there's a lot of breaks above EMA, a lot of fake outs, right? On the 5 minute, and again, this is just personal preference, but on the 5 minute, it really begins to slow down, right? And if we look at what happened today, it was very easy to see that on the 5 minute, it never broke above the EMA until we actually got confirmation. Now, I'm not here to say that the 5 minute time frame is perfect, because it is anything but that. The idea is to put myself in a position that I'm less likely to get faked out on. And by slowing things down and going on larger time frames, I prefer the 5 minute. Other people might prefer the 10 or 15 minute. Feel free to share your preference down in the comment section. But at least by slowing down, you are more likely or less likely to make impulsive decisions. And that's the beautiful thing about this. And that's the concept that I want to talk about. I have the 3 stages of reversal that I talk about: the rejection, consolidation, and confirmation. Again, I explain that in a little bit more detail in the lesson library with the 3 stages of reversal. But I also like to slow down. And when looking at the 5 minute, if you are someone that often finds themselves over trading or getting faked out by the different indicators that you have because you solely trade on the 1 minute, then maybe it's something that you can practice or test out to see if it works a little bit better for you, and to see if you have a higher success rate because you're less over trading and more focusing on quality confirmation setups, right? So again, EMA, we tried to push up, we never broke above EMA, still got rejected. Lower high, we sold off, we pushed up, never broke above EMA, still got rejected. Came back to retest. It was very easy to see. It did a double bottom here, went back up, finally broke up above EMA. And you might be like, well, Ricky, then I miss out on, not being able to buy at the bottom. And now I bought, from overall bottom at 39.30 to overall confirmation of the EMA at 39.80. I missed out on 50 cents per share. Well, guess what, right? What if this would have continued to sell off for the remainder of the day? Or at least with that on the 5 minute time frame, you would have not entered a trade that would have continued to sell off. And that is the whole point. Yes, the entry for your confirmation sometimes is a little bit higher on the larger time frames because you're waiting for more true confirmation. But the idea behind that is that at least you're less likely to enter a fake out. And that is, to me, more important than having a lower cost when it comes down to your average purchase price, and more important on actually getting in on quality setups. And it's the same thing when it comes down to SQQQ. SQQQ was indicating signs of an uptrend until it wasn't, right? It peaked, it did a double top, and then it began to sell off, and it was very easy to see that, again, it went back to retest. It did touch the EMA, but then got rejected on the 5-minute. It went back to retest, got rejected off the 5-minute. It's so beautiful when it is set up like this. And again, not every day is it set up like this, because on the 5-minute, kind of like it was yesterday, there was a lot of fake outs, a lot of consolidation, and it was just a choppy day. So again, I'm not here to say that, oh man, this is the perfect time frame or whatever the case might be. I'm just here to talk about, I hope that this thing just puts you in less of a position to overtrade and to be faked out, right? And to me, at least in my experience, it has. By focusing on more quality setups and by slowing down and looking at larger time frames, it has encouraged me to be more selective. And this is why we have the saying of trade less, profit more. You guys can let me know down in the comment section if you agree or disagree. I hope that this thing inspires you, regardless of what time frame you actually end up using. That's insignificant. I hope that this simply just inspires you and motivates you to simply be more selective with your trades, especially if you find yourself over trading. I do want to remind you that tomorrow, when it comes down to economic reports, we do have non-farm payrolls and also non-farm private payrolls and the unemployment rate that is all going to be released tomorrow, 1 hour before the market opens. And you better be ready, because it's, again, the economic reports that were released this morning that actually really pushed the market to sell off further than what it was. And I have an expectation that maybe tomorrow it's going to be a very similar thing. But like I said, my job is not to predict. My job is to react. And instead of trying to hope for something to happen, I'm just going to wait for confirmation, wait for the reports to come out. And whichever way the market ends up choosing to go, guess what? Because of SQs and because of TQs, I like to keep my trading simple. I'm going to focus on direction, wait for that confirmation, slow down, and then ease into it during my live trading session with the LPP team. I would love to invite you to my live trading session tomorrow. If you want to be able to watch me trade live tomorrow and every single day the market's open moving forward from that, it's the second link in the description down below. We are running our biggest sale right now. It's a one-time payment, lifetime access. And again, if you sign up by today, you can watch me trade live as soon as tomorrow. It's a one-time payment, lifetime access. And if you have any questions before joining, shoot me a direct message via Discord, and that's that first link in the description down below. I appreciate your time, and like always, let's make sure that we end the year on a green note. Take it easy, team.